Okay, so FX. Now let me start the pound dollar. I just want to go through a trade plan, basically a trade that I placed, when was it? I think it was this morning or late last night. Late last night, okay? I know one of my trading rules is not to trade on Monday, but the US session sometimes, especially when it's late to US session, when I see a trend, I might take it, all right? So I placed a trade short on the pound dollar, and let me just run through my thought process of what's my trade plan like. Okay, so let me show you. Let me start the weekly chart. Okay, so weekly chart really bearish, no two ways about it. All right, what I like is that it made a clear lower low. I know there's a bit of divergence, there's a bit of a bullish divergence on the MACD, but for me, I'm taking it as an intraday trade, so I wasn't too concerned about weekly divergence. What I like about the trade is that for me, you see this line here, the 1.44 level. All right, you see this previous support here. So 1.44 level here was broken below, so I like it. And the next level of support wasn't that strong, maybe until the 1.4. Okay, so I like the trend. I like the trend on weekly chart, really, really bearish. So I went in on the daily chart. Okay, and the daily chart, we were lingering somewhere here. All right, actually, let me just confirm that. This was the candle. Okay, this was the candle. Okay, this candle. All right, so I saw this candle here. It's a nice bearish pink candle in a downtrend at a resistance level. Look at this. If I draw a line here, okay, you can tell by the touches of this candle around here, resistance, resistance, and right now we made a lower high. Okay, so this area here, around the, what level is that? Around the 1.4350 level. All right, I can see that many touches. It used to be support, now resistance. Moving average is nice, fending to a downside. Momentum is nicely bearish. No divergence on the daily chart. So I was planning a trade to the downside around the 1.4350 level. Okay, so this is daily chart. So what I did was that I zoom into the 4 hour. Just have another look. And let me just take away some lines here. Okay. So what I like about the 4 hours that this was the level. So this was the hot spot, yeah, the 1.4. Let me just draw the line there. 1.4350. This was the hot spot. Okay. So it made a touch here, came down, made another lower high here, and this was where I was last night, around the lower high here. So this is the first sign that the bearish momentum is coming because there's a lower high. So my entry was based on a 1 hour chart. All right. So what I like is this. This is a 1 hour chart, yeah. So it was actually bullish first. So I was on the sidelines. The hot zone was 1.4350, which was somewhere here. So it hit the hot zone. Okay. Normally when if it's so bullish, and even though it hit my hot zone in terms of resistance, right, I will not just short like that. I want to wait for the short-term charts to confirm my bias. So even when I see such bullish momentum on short-term chart, even though I know this is a nice resistance on a daily resistance level, okay, I still wait for the short-term chart to confirm. That's a very, very important point. Do not just jump in. All right, so I waited and waited. It came down. All right, this is not a change of trend, yeah, over here. This is just a move downwards. This is the first sign that a change of trend might come in, a lower high. Okay, and when it made a lower low, I was really happy here. And subsequently, it made a lower high. So my entry was here. This was about 11 p.m. last night. This was my entry on this candle. Stop loss was above the previous high here. Okay, not that high, maybe about 5-10 pips above the high. And I took it down back to the previous support around 14180, 14190, about 60-70 pips trade. And I got out here because it was at about 6:30, 6:45 p.m. today. I know Mark Carney was going to give a testimonial. I don't want to get caught in the news. And I got out for a profit. And the reason why I targeted here was it was previous resistance and it might turn support. Some of you say, why didn't I want to hold on to it and maybe target the previous low? Like, the first reason is because I told you there was news coming out. All right. Second reason is on the daily chart. Okay. Let me just make full screen. Okay, on the daily chart, I don't really like this candle here. This is a nice bullish pink candle. Okay, there's a bit of a bullish pink candle here. Okay, and on the weekly chart, another bullish pink candle here. and the moving averages are still quite far away. All right, it will take some catching up to do. That's why I wasn't targeting a new low or anything like that. For me, if it came back to around the 180, I'm more than happy to take all the profit. All right, so if you notice that even though I use weekly and daily charts to analyze, right, I still can squeeze in intraday trades and make some pips out of there. All right, so I'm just going through my thought process and my trade plan, and hopefully you can understand where I'm coming from. Okay, so risk to reward is really good because your risk is based on the short-term chart. Remember I told you I took the trade based on this little arrow here, and my stop loss is only like what, 128.90, about 30-40 pips, but I made 1 to 2. I made about 60-70 pips. Okay, so I hope that this helped. I mean, I'm not here to try to brag, but I make some profits here and there. No, that's not important. Okay, in fact, losses I'll be more than happy to share with you, but I'm sharing you with the more important thing is the thought process. The thought process is very important. How do you plan the trade? Okay, it's not just, okay, it's going uptrend, downtrend. It's how you plan the trade. This is very important. And if you do this, repeat this over and over again, that's where you become a better trader. All right? So I hope you guys managed to learn something. I try to go through my trade plans every week or so. Whether it's losing or profitable, that doesn't matter, because sometimes a good trade plan, you execute it flawlessly, but the market did what it wanted to do and you get stopped out. So be it. Okay? So that's pound dollar for you. So where we are right now, okay, where we are right now is on a weekly chart. Okay, I did mention that there's a bit of divergence, bullish divergence. I did mention that there's a nice bullish pink candle. I'm more inclined to think that we're going to make retracement back to 145, quite similar to a lot of the indices actually. If you look at the daily chart, okay, I don't know what did Mark Carney say just now, but there's a bit of a bullish reverse, reaction to it. And we'll see what happens here, because on the daily chart right now is a bit more sorry, this is a 1 hour chart. Okay, on the daily chart, okay, I'm very keen to see what happens at this 14350 area. It seems that we are going back to that level here. Okay, but if you go back to that level, okay, maybe on the weekly chart, the moving averages will catch up to it, and then from there, let's see whether 14350 will be tested, will be taken out. If it doesn't take out, there might be more room to the downside. Okay, if 14350 breaks above, then I'm looking at least around the 145 area to continue the downtrend. All right, any questions? All right, so let me move on to the euro dollar. What is the lowest time frame? Oh, okay. Good question, Ben. Ben was asking what is the lowest time frame you will use. Now, if your analysis is based on the daily chart, let me go back to pound dollar. Yeah. So my analysis, my trade plan was based on the daily chart, based on all these candles, and remember I told you the 14350 level. So my analysis was based on daily chart. If my reference point is on daily chart, I will use the lowest time frame, 15 minutes. I'll prefer the 1 hour. Okay, you cannot have too big a gap, because let's say if your resistance is 14350 and you're taking a short based on the you're taking an entry based on a 5-minute chart. All right, even though the 5-minute makes a change to a downtrend, all right, and you take a short, there's a chance that it might push back up again to uptrend, because the lower the time frame, the more noise, isn't it? So that if you take a 5-minute chart entry based on the daily analysis, then it might be too far away. Okay, you might be stopped out several times, and it's very frustrating. So I'll say if your analysis is based on a daily chart, then your entry should be maybe on a 1 hour or 15-minute chart. If your reference point, if your analysis is based on a 2 hour or 4 hour chart, then maybe you can look at a 5-minute or 15-minute chart. Okay, but for me, I like to pair the 1 hour chart with my daily analysis, because the 1 hour confirmation is at least quite safe. Okay, so if I'm looking at the daily chart and say that I want to short at this resistance level, I'm looking for a 1 hour chart to show me a new lower low or lower high, to show me that it's confirming with my daily downtrend analysis. Yes, Ben? I hope I answered that question. Thanks for asking. Okay, so that's pound dollar for you. Let's go to euro dollar. Okay, euro dollar, patience is the name of the game, yeah. I know Draghi came out to reiterate that they're going to do whatever it takes to support the Eurozone. But let's see what happens, okay? So on the weekly chart, we are still consolidating. Okay, however, it is still a downtrend. You see the circles I drew in the last webinar? It's still a lower low. This is a lower high. There's a nice trend line resistance here. The key thing to look out for euro dollar is the key support I'm looking at is around the 108. Okay, I need to see a candle close below the 108. You notice how this candle is above the 108? Last week the candle actually closed below it, so it's the first sign that the bears might be in play. But if we go below 108 again, I'll be more than happy to join in the short side, maybe back to the 106 and 105. Okay, because the weekly chart is still in a downtrend, moving averages are still fanning nicely to the downside. Okay, if you go to a daily chart, that's where it gets a bit messier. Okay, but this is the key low that it needs to take out. Alright, if it breaks below this key low, I'll be more than happy to take another 100 pips down to back to the 105, 106 area. Okay, but you can see that roughly, not the clearest, but you can see a series of lower highs here. So lower highs means that momentum is still to the downside. I don't want to do anything right now because for all you know, it might make another test of this 109 level. Okay, so I prefer to let it break at least this level here and then pull back down. This is a trade plan for euro dollar. Alright, if not, I'm not going to touch it for the next few days unless this happens. Now, if the other scenario is that if it breaks this 109 clearly, then I've got to reaccess because the weekly chart is still bearish, but if it breaks this 109 level, then I got to reaccess, but I'm more inclined towards to the downside. Okay, so just take note of these levels, the 109 and 108, these are key levels for me. Alright, that's the euro dollar for you. Just be a bit more patient on this one. What else? Okay, let's see. Aussie dollar. Yes, John, euro dollar is still quite sideways. You could be patient. I mean, but there are other trending markets out there. Aussie dollar weekly chart. Okay, what I like about the weekly chart, it is on a downtrend. Okay, but just be careful. There's a very big positive bullish divergence here. Look at this. There's this a nice swing. This is a very nice. This is a really big higher low. Market made a slight lower low. So even though there's a downtrend, right, just be a bit careful of the divergence over here. Okay, you see a lower low, but the market is made not much of a significant high low. Okay, but it's still in a downtrend. So if you look at the daily chart, alright, this level here is key to me. What level is this? 70, yeah, not surprising, 70 cents. Alright, so it's still in a downtrend. What will cause the daily trend to reverse? It will cause it to reverse if we break above 70 cents. Okay, if we break above 70 cents and above this level here, then it's a reverse to the upside. But as long as we stay below 70 cents, okay, I'm more inclined to think that we might make another push back to the previous low. I see a kind of head and shoulders forming though. Yep. So the key level here, this is a 4-hour chart. Yeah, key level to watch out for Aussie dollars around the 70 cents here. Okay, but just be mindful of a shoulder, head, shoulder. If we break the neckline of 70 cents, we might make a push higher. Okay, so Aussie dollar, I'm going to stay on the sidelines and see what happens. Let's see whether this inverse head and shoulders pattern plays itself out. Alright, but the 70 cents to me is the key level. Let's see if we are able to break it. Okay, that's Aussie dollar for you. Now, Aussie dollar may be difficult to go. Yeah, exactly, Joe. I mean, it's still bearish. I think the weekly chart is still towards the downside. That's why I said 70 cents is a key level to watch out for the Aussie dollar. All right. I mean, China's weak demand. I think the China slowdown will go on for the whole year. Okay, but that doesn't mean that the market will go down for the whole year. I mean, the market moves in waves. All right. So I still think that you still need the charts to confirm. Yeah, I think China. I mean, the Chinese market is a bit of a wild horse to trade. I never like to trade Chinese markets. You got to understand that the Chinese stock market is comprised of 70 to 80% retail traders, speculators, retail traders, and it's really tough to trade such a market when it's so volatile. All right, I prefer to trade markets where it's more predictable. All right, so depends on what's your cup of tea. So that's Aussie dollar for you. Let me go through some of the trades that I'm looking at. Okay, so if we look at this dollar sing, okay? I think some of you might have received an email sent out by marketing department or Trade Idea. I normally do some trade ideas here and there. Dollar sing seems to be quite interesting because on the weekly chart we have broken a new. You see that it has consolidated quite a bit here, okay? And we have made a significant break to the upside, a higher high. Right now, it's still an uptrend, and we have retraced back to the support level around the 143 area. Okay, so this is a weekly chart, still very bullish, very bullish. My only concern is there's a bit of a divergence here, but that doesn't mean that we can't take intraday bullish trades of it. Okay, a bit of divergence here, bearish divergence. Okay, but if you look at the daily chart, so weekly chart bullish, daily chart bullish. So I'm very keen on looking at what's going to happen at the anywhere near the 142 to 143 area. Okay, we can see that the past few daily candles we are unable to close below it. In fact, there's some shadows forming it. So I'm keen to see what the market does here, because if I see a bit more reaction of this level, I'll be happy to go long, and my first target will be the previous high, about 144. So again, you see, my first target is always the previous high or previous low. Of course, if I see that the trend is strong, I might let it ride and let it break a new high or new low, but my first target will always be the previous high and low. But because I'm always analyzing based on the daily and weekly chart, at least it's still quite a number of pips to be made intraday wise. Okay, so pay attention to dollar sing, this level here, pretty key support level in the uptrend. Alright, if we break this level, then the trade plan is invalid. Then I'm more inclined to think that we might come down to this support trend line at around 142. If not, I'm looking at around 143 level and see how we act there. Let's go to a 4-hour chart. Okay, the 4-hour chart, let's see. Yep, the 4-hour chart is slowly grinding its way up. Not the strongest yet. Okay, but what I like about the 4-hour chart, that it has made a new higher high compared to this high, and we have formed some form. We have formed out some form of support trend line here. Okay, if it breaks below this trend line, then maybe the trade plan is invalid. But if not, I think there's still support. There's every chance that we might make a push to 144. Okay, because the daily and weekly chart is still bullish to me. All right. Lenny, hey, hi Lenny. It's been a while since I've seen you. Hope all is fine. Dollar cat. Okay, dollar cat weekly chart. Very, very bullish. Okay. Nice convergence. Look at this higher high. MACD higher high. So no divergence. Very nice convergence there. Let me zoom out a bit. Let me see if there's any key resistance around. Let me go to money chart. Yeah, the 145 is a key resistance, but it's still very long term on the monthly chart. I just want to have a look. Weekly chart bullish, monthly chart bullish. Let's see what's happening in the daily chart. Daily chart also bullish. Okay. Now I know that we have formed a couple of big red candles, yeah, but this is still a uptrend. A downtrend will only start if it breaks this low. Okay, but it's still on a uptrend. All right, so let me see if there's any trend line here. Give me a moment. Yeah. Nah, not a nice. Okay, maybe you can draw this trend line here. Okay, no, let's ignore the trend lines. Okay, nothing nice there. But a few things that might work for you onto the upside. Number one, there's a bullish divergence. So you see the price make a higher low, MACD make a lower low. So this is called a bullish divergence. Okay. Number two, price action is still on the upside, still bullish. We have retraced back to the moving averages, which is a form of dynamic support. Let me see whether there's any, because it's so bullish, right? Let me see whether there's any support at this level. This is 14100. Okay, 14100. Let me see whether there's any support on the weekly chart around there. 14100. Perfect. Okay, because it's so bullish, I need to zoom out, yeah? But look at this 14100 level. Look at this level here. Nice resistance. A bit of resistance here, and that's why it's becoming support. So I like the 14100 level. Okay? So weekly chart looks good to go, yeah? Still looks very nice and bullish. Now let's go back to the daily chart. Okay? So right now we have made a bullish engulfing candle compared to the previous candle at, not surprising, market reacted off the 14100 level. Now, let's see where we are today. So I'm bullish, yeah? I'm looking to long it. Okay? Let's see the 4-hour chart. Alright, 4-hour chart, there's no change of trend, but we have made to the push the upside. Push the upside. Now, one trade plan that you can consider is this. Now, this is the previous low. Okay, we have made a swing upwards. Alright. The first level of support that it might react to is probably where we are right now, around the 142. Okay, if you're targeting a swing trade, your stop loss can be below this swing here, and your first target can be the previous high around the 144. That is a 1:2 risk to reward. Alright, around here, the previous support term resistance. Alright, or if you want, I would say anywhere because this, don't forget, this on the 4-hour chart looks to be a swing to upside, right? But on the daily weekly chart, that shows this is a long shadow. So if I'm going to long it, my first target will probably be at 144. Alright, because I'm not surprised if we form some kind of chart pattern there. Okay, but I like this trade plan to the upside for dollar CAD. Let's see the 2-hour chart. Alright, it looks pretty decent. Alright, but I think the stop loss has to be below 141. Because there's support for you. Okay, but let's see whether 15 minutes any change or trend downside. 15 minutes a bit more concerning because look at this drop. Alright, so just be a bit patient, Lenny. Look at 142 and see how it reacts. Your support is 140, is it? Let's see whether, where's 140? Yep, 140 is a possible support. It's a possible support. So if 142 fails, 140, no, not 142. If 141 fails, then most probably we'll go to another level support at 140. Okay, but for me, the 141 is still key. It's still key. We'll see how the market reacts from there. All right. John, safer entry, we break the previous high on the 1 hour. Let's see. Okay, John is saying that you want it to let it break the previous high around here and see whether you can push further. Yep, that's a decent trade plan. Okay, what I'll do is this, because for me the 1 hour is trending to the downside already. Okay, you see this low has broken. This low here has been broken. So this is a lower low for me. So what I want to see is I want to see a 1 hour at least being supported on this time frame. Okay, and then from there make a new high, low, and then I'm happy to take it from here. And then hopefully it will grind higher. Okay, but I'll be a bit more patient alongside because the 1 hour is in a downtrend. Okay, because for all you know, it might make a lower high here and then start making new lower lows, lower highs, lower low, and break the key 141 level. And if it breaks the key 141, then Lenny's support might come to play, 140. Okay, so very important to let the lower time frame change the trend to confirm your higher time frame bias. It will help you keep out of trouble. All right, Lenny, I hope that's I hope you get what I'm harping about. All right. No, I'm not the best. I'm just learning. Okay. Every day is a learning journey for trading. That's why I love it so much. All right. But whatever it is, always calculate your risk management and keep your risk to reward. Okay. I'm not sure how many of you were here last week. If not, please watch the recording. But I don't want to sound like a broken record, but let me do a very quick run through of what might be useful in your trading. Okay. So I mentioned last week that it's very good to keep a record on of your risk to reward and how much you return. So for example, if you trade a euro dollar trade as your first trade, and maybe your return is 1.5. Okay, which is good. Means that you risk 1, but you get back 1.5. And then maybe you traded the DAX, and your return is 0.2, which is also decent. That means because you have not lost money, 0.2 means you are break even. So maybe you are in profit and then you move your stop break even, the thing came back down and hit your stop. So this is a break even trade. Okay, and then maybe you traded the pound dollar and then your return is 1:1. Okay, not too bad. And you trade, after that maybe you trade the China A50. And that one you went a bit crazy because the market was so volatile, you got a bit more emotional, and your return was a -4. Okay, and then you start kicking yourself because you realize that your -4 actually took away all your previous profits. Okay, and then you came back and then you traded the US S&P, for example, and then it was an awesome trade and you make a +3, meaning that you risk 1, you earn 3 times. All right, so net is still positive, but by doing this exercise helps you see whether you follow proper risk management in terms of risk reward. And if you do a analysis, right, you realize that in trading, you do not need to have the Hollywood trades all the time. All your little winners, the 1.5, the ones, all these will add up to give you, to make you a profitable trader, basically. Okay, and sometimes when you have a good stellar trade, it can push your P&L up. It can offset all the small losses. So the key thing is this: do not have this kind of -4 kind of risk reward. If you have something like that, go bang your head against the wall. Okay, so what you should do is, the most you should do is -1. All right, no, sorry, the most you should do, okay, is -1, correct. And 0 means you're break even. Because if your risk reward is more than -1, means that your risk reward is negative. And maybe you got to do your psychology. Okay, so if you keep track of this risk reward, is very, very useful because it helps you analyze your psychology as a trader. And then from there, you'll be able to appreciate how the little profits count. Okay, and how to minimize your losses. All right, so do this exercise for 2016. Very, very useful. This is on top of your trade journal. This will be very useful in analyzing your trading behavior. Okay. All right, so what else? Let's see. Any other pairs that you guys want me to cover? Yes, John, totally agree. Money management is very, very important. Psychology as well. I mean, psychology and money management goes hand in hand, I would say. Yes, Ben, dollar cat is very sensitive to oil. It is. Okay, but still, I mean, if you're a pure technical trader, you still got to use your technicals to guide you, because fundamentals is very hard to predict. Number one, it's hard to predict what will happen next day. Number two, it's hard to predict how the market will react to the news. Okay, so you see, like oil last week, right? Even though Iran sanctions was lifted, and it means that there's be a new glut of supply in the market actually rebounded. Oil actually rebounded. So how the market reacts is nothing altogether. That's why I love my charts. The charts are the key things for me. Okay, so any more FX before I move on to commodities? John has a question on gold and oil, but you guys have any more currency pairs? In terms of yen pairs, just be mindful. Let me just do a quick coverage of yen pairs. Dollar yen looks exactly like the Nikkei, in the sense that it's go to the daily chart. Okay, dollar yen looks like a Nikkei in the sense that it's rebounding off the 117. It tried to break below it, but I think we are looking at more further consolidation for dollar yen. Okay, so daily chart, you can see there's a change upside. There's a new uptrend on the daily chart already. All right, so most of the yen pairs are making a bigger pullback. Okay, any more FX? Hey, Victor, hi, good to see you here. Yen pairs, any specific yen pairs that you want me to cover? So dollar yen, I just covered. Any specific yen pair? I do have my MT4 scale. I'll show it to you next week. But most of the yen pairs are making a bit of a rebound. If you look at pound yen, right? Pound yen has been the most bearish last week. Okay, but if you look at the weekly chart, pound yen. Okay, let's see. We have hit support around here. Okay, I'm still bearish on pound yen. This is a very bearish chart on the weekly. There's no divergence, nice convergence, so very, very bearish on the weekly chart. On the daily chart, okay, I'm still very keen to see what's happening around here, 170. Quite similar to pound dollar, okay? So I'm still very keen to see what happens in 170. If I see more weakness, I'm more than happy to take it short, maybe back down to 168 or so. I was actually planning the trade plan for pound yen as well, but I took a pound dollar instead. Okay, so look at the 170. It's still bearish. It's still bearish. Okay, there's still a chance that it might make another push down. Okay, if not, then it might make a push higher. Maybe we trace back to the 172 level, 17250 or so. Okay, but keeping my eye on the pound pairs, because the pound pair still looks very bearish to me. Okay, Kiwi yen. Okay, let me do a quick Kiwi yen one. After Kiwi yen, I go to commodities, yeah, because I'm running out of time. I'm so sorry about that. Kiwi yen. Where's my Kiwi yen? I don't have Kiwi yen here. Seriously. Let me just get Kiwi yen up. Okay, so look at Kiwi yen. First things first, look at the weekly chart. Now, the first thing that strikes you if you look at the weekly chart is we have made double bottoms. Key support level 175. Very, very key levels. Look at that. How many times? 2013, 2014, 2015, 75. Very, very strong support of the Kiwi yen. A bit of bullish divergence as well. See, double bottom but higher low. So a bit of bullish divergence as well. So 75 key level. So if you're planning a long-term short, the first target should be 75, okay? So weekly chart looks a bit more bearish, but we have hidden key support there. So you can compare the pound yen and Kiwi yen charts. You can see how different it is. Kiwi yen is a bit more bullish, all right? So the key thing to look out for Kiwi yen is the 77 area. Okay, I will not take any short unless we are close to the 77 area, and then my first target will at least be the previous low around the 75. Daily chart is still to the downside. Okay, however, it's reacting off a key weekly support level, but the next resistance I'm looking for is 77. Let's see whether the market fills there. The market fills there, good level to short, first target, previous low. If the market breaks above 75, then I'll stay on the sidelines, because on a weekly chart, alright, for all you know, it might make a pushback to 79 or so. Okay, so I'm still a bit more bearish on the Kiwi yen, but take a look at 77. 77 is a key level to me. If it breaks above 77, then I'll be on the sidelines. Alright, because there are nicer yen pairs to the downside. Okay, I see some new questions. Anthony, Euro Pound. Okay, hold on, yeah. Victor, does that answer your question? I hope. Okay, let's look at Euro Pound, Anthony. Okay, let's see what's happening in Euro Pound. Nice. I didn't see this. I like Euro Pound because it's made a new higher high, so the momentum has shifted. Double bottom, or you can call this a higher low even, and we have made a higher high. So weekly uptrend on the Euro Pound. Nice change to the upside. Okay, let's look at the daily chart. Oh, before we look at daily chart, let's see if there's any strong resistance on the weekly chart. Yes, strong resistance level at around the 78 cents level, thereabouts. Or let's call it now the 77.50, I would say. Okay, so no surprises that the 77.50 was reacted, it's coming down. Now the next question is, if you're bullish, where's the support to go long? Okay, let's go to the daily chart. Now on the daily chart, the first level of support is here. Okay, we have reacted from there around the 75.50. Let me delete some lines, yeah? Okay, so that you won't be confused. Okay, this level here, anywhere between 75.50 to about 75.80 or so. Okay, that's a really nice support, and it's not surprising that we have reacted from there. Alright, this will be a nice, if you had taken this, when was this? This is daily chart. If you had taken this 2 days ago, this will be a nice trade to the upside. Your target will be can be the previous high around 76.50 or so. But if you have not, it's definitely too late to go long right now. Why? Because if you go long right now, because either way, if you're going to long it, your stop loss will definitely be below this swing. And your first target is too close. There's not much meat left. You see the previous high is around 76.90. Let's put 77. Really not much meat left. Okay, so your long entry has gone. Alright, if you're taking it at around the 75.50, that's a good level. If not, better be patient, because what makes you think that it might not form some kind of a channel or a bullish flag and start coming down lower? Okay, so so on the H4, is it good to go long? That's your question, right? Let's see. Alright, so it's nice trend. I mean, I think there's a trend line here as well. Okay, something like that. Not the nicest trend line, but I would say if you want to go long now, not a good level. Let's see the H4. You see the H4? H4 is on a downtrend, yeah? You notice that the low here was broken, lower low. This is a lower high. Okay, so I'm not surprised that the H4 is doing something like this. Alright, so I would not go long here. You are too close to resistance. Alright, because even if you long here, your next level of resistance is just at 77. Around here. Okay, so if you look at the daily chart, right? Okay, this is a bit cutting too thin already. If you're talking about risk to reward, it's cutting it too thin. Alright, so I'll be a bit more patient on Euro Pound, even though the weekly chart is bullish. So good analysis, bullish to the upside, but I'm looking for better level of support to get in. Okay, maybe see what the H4 does, and let's see whether it can come back to this level of support here, and then from there I can take it long again. Alright, because it might be forming a bullish flag for all you know. What I don't like about the H4 is that it's forming a series of lower highs, so the momentum is still to the downside. So even though the weekly chart is on uptrend, the 4-hour chart is not confirming yet. Okay, alright, this Euro Pound, let's see what's next. Elvin, Euro Yen. Let's see euro yen. Okay. John, I might not be able to cover gold and what's the other thing you asked? Gold and oil. But let me just try to cover everything. Okay, let's see euro yen. And Alvin wants to broke daily down channel, couldn't push up good level to short. Okay, let's see euro yen. Alvin wants to short. So euro yen, looking at a weekly chart now, one look you can see that looks something like Kiwi yen, isn't it? 128. What level is this? 127. 127 support plus a nice bullish pink candle on weekly chart. Very strong support here. Look at this. Resistance, support, support, support. So 127 is a very nice support in Kiwi yen. Euro yen, sorry. Looking in the daily chart, daily chart is forming a channel. Okay, so Alvin is asking whether you can short at this channel and try to take it down. Now, it is an aggressive trade plan. Okay, it is possible. I think risk to reward wise is not too bad. If you take a short near the channel resistance, put a stop loss above the previous highs here, and see whether it can come down to at least the bottom of the channel. Possible trade plan. Not my cup of tea, but it's an aggressive one. It's possible. Okay, daily chart, you can see a very clear consolidation around here as well. Okay, so if your trade plan, if you want to take a cheeky, I call it a cheeky short back to the previous support of the channel around 127, yeah, it's possible. It's a bit high, more aggressive, but it's a possible trade plan. Okay, at least you're taking a short at resistance, not at support. Okay, but just be mindful that there's a lot of support at the this 127 level here. Okay, because it looks like it wants to make a push up to 130 very easily, 130. Okay, so if you are taking a short of the resistance, if it breaks the resistance, please get out of it. Okay, there's no point keeping, because if it breaks this resistance, a new higher high is formed, and the 4-hour chart will change your trend to the upside already. Okay? Yeah, I agree, Ben. It's a bit of an aggressive trade. You get what I mean, Alvin? Okay, so that's euro yen for you. Now let me cover the last one. Raju, pound cat. Okay, pound cat. Let's see the weekly chart. Pound cat. Not the nicest of trend. I don't really like it. It's very messy. Okay, there's a bit of a support trend line here. It has made a higher high here, but there's a very significant bearish divergence on the MACD. Okay, pound cat now is consolidating on the weekly chart, but I'll be a bit more inclined to be bearish. Okay, if you see this low here, we have broken this low, so it's a bit of a reversal to the downside. Okay, it has made a lower high here as well. Let's go to the daily chart. So weekly to me is a bit more consolidating. Now let's go to the daily chart for a better picture. Okay, just delete some of the lines here. Okay, so daily chart, what I like is make a double top, or you can say a lower high. Either way is the same thing. We have made a nice lower low, and we have retraced back to the previous levels here. So Raju, if you're taking a short, yeah, you're bearish, right? If you're taking a short near the 204, that's a decent trade plan, because we have made a lower low. Okay, so the market has changed to a downtrend, lower high, lower low, and it pulled back to 204. This is a nice level to short. Okay, but right now I wouldn't do anything because we are too close to the support trend line here. You see that? So if you're gonna be a bit more bearish and you're not in the trade yet, I will let it break this trend line first, pull back, take a short here, and hopefully come down from here. But yeah, I think it's more bearish to consolidating. Okay, this will be a nice level here. You see all these touches here? Lovely. This was yesterday's trade. Okay, but no point talking on hindsight. Alright, so let it break this support trend line first. Or for all you know, it might come back to test this level and then see what happens here again. Okay, because don't forget the weekly chart is not the clearest of trend, but the daily chart is looking more bearish. Okay, but so if it breaks that trend line here, awesome. If it breaks this trend line here, your target can be all the way to maybe $2 or maybe the 190 level. Alright, lots of pips there to be made on an intraday to swing basis. Alright, so it's pointing towards the downside, but it's slowly turning there. Okay, just got to be a bit more careful. So just imagine for a weekly chart to turn around, right? unless there's a big fundamental news, right? It will take time. Just imagine like a Boeing 340 or 380 making a big U-turn. All right, you got to be a bit patient. But if a weekly chart, once it starts trending, okay, the trend can last for very long. All right, so that's why I'm quite surprised when, a lot of people are concerned, a bit confused or where the trend is for the yen pairs, for example, because the weekly chart is downtrend. And when the weekly chart is a downtrend, it might stay there for a long time, for weeks or months even. It's just that the retracements, you got to be careful because, like I said, the market doesn't go one direction. It moves in waves. So as long as you have your bias right, as long as you have your bias firm, all right, based on whatever time frame that you trade on, then you shouldn't change too much. Okay, you keep your bias firm, and then from there you just apply a strategy to it, right? And then from the main thing is to find consistency. Okay. Okay, last question. Okay, I really exceeded time. The pound is very bearish. It's around 146. Is it a good level to short? Look at pound dollar. Is it, Alvin? I think I covered pound dollar just now. I don't really like shorting it unless we are back close to the 143.50 level. Okay, because if you short, I discussed my trade plan just now. If you short right now, it's too near this support level. This is immediate support. 142 is immediate support. Okay, let me see whether there's a trade plan in the 1 hour. Nah, I don't like it. I don't like it. I would rather let it see what happens because it tried. The thing is that the reason I don't like it is because the daily chart, right? The first resistance at 143.50, which I talked about just now, was reacted. And even was reacted, the market couldn't push lower. So it tells me that it's still being supported. Okay? And there's a whole wealth of support levels here, which I mentioned just now. Alright, so I'm not that keen on shorting the pound dollar unless you're back to 143.50 and then we see what happens. Okay, alright, if not, thank you so much. Sorry I started late today, but I hope that for those who are new to the webinar, please come back on a fortnightly basis. Thank you for fielding all your questions. And it makes a good discussion because we go into details, how to enter, how to exit. I share with you my previous trade plans, what are the trends, and this is what trading is all about. It's all about trade planning and discussing. Okay, pulling the trigger is easy. Okay, it's very easy to pull the trigger. So don't be addicted to it. What is difficult is to form a nice trade plan. All right, so focus on trade planning and then the profits will take care of itself. All right. So again, thank you so much for your time. This webinar will be recorded. It should be uploaded in the next 1-2 days. If not, I'll see you in 2 weeks. Always remember to plan the trade and trade the plan. Have a good night. Thank you. Cheers.